Silver hit $66 per ounce on December 17th, 2025. All-time highs, 127% surge in 1 year. And if you think this is just another commodity rally, you're about to miss the most significant resource trap executed in modern history. Because this isn't a rally. This is the final move in a game that's been playing for 15 years. And the United States just realized it already lost. While everyone was watching Bitcoin and tech stocks, China quietly executed something remarkable. They accumulated in silence. They exported at suppressed prices. They became indispensable. And then on January 1st, 2026, they're flipping the board. Silver export controls. State Trading Management, the world's largest silver consumer, which produces over 80% of global solar panels and uses roughly 900 tons of silver every year, is cutting the supply line. And America, zero strategic reserves, depleted, gone. We'd need at minimum $50 billion just to rebuild what we gave away. And that's assuming we can even buy it. This has happened before, 3 times in the last 150 years. Same pattern, same mechanism, same devastating wealth transfer. And once you see it, you'll understand why this was always inevitable. There's a pattern to how nations lose their wealth. It's not random, it's not bad luck. It's a 4-stage mechanism that's played out across centuries, and it works every single time. Stage 1 is silent accumulation. While a resource is undervalued, while nobody's paying attention, someone quietly buys everything they can. No headlines, no announcements, just systematic acquisition of an asset everyone else has forgotten matters. Stage 2 is suppression. Once you've accumulated enough, you flood the market. You keep prices low, you export heavily. This does 2 things. First, you can keep buying cheap. Second, and this is critical, you lull everyone else into thinking the asset doesn't matter anymore. They see flat prices and think it's irrelevant. They sell their reserves, they stop mining, they forget it exists. And crucially, they become completely dependent on your supply. You're not just the swing supplier anymore. You're the only supplier that matters. Stage 3 is the pivot. Export restrictions, licensing requirements, sudden price explosions, the trap springs. The asset everyone forgot about is suddenly the asset everyone desperately needs, and there's only one source left. That's when you control everything, not with military force, with leverage so complete that no army can solve it. Stage 4 is the transfer. As prices explode and supply vanishes, wealth flows in one direction. Reserves appreciate massively. Industrial competitors pay multiples for supply they took for granted. Economic power shifts, and the nation that executed the pattern ascends while everyone else scrambles. This isn't theory, this is history, and it's happened 3 distinct times. February 12, 1873, President Ulysses Grant signs the Coinage Act. The bill had been debated for 3 years, but almost nobody noticed one crucial detail buried in Section 15. The standard silver dollar wasn't on the list of authorized coins anymore, just omitted. Silver was demonetized. Not with fanfare, with silence. Why? New silver discoveries in the American West, especially the Comstock lode, threatened to flood the market. But this wasn't about managing supply. This was about wealth transfer. Stage 1 had already happened. Eastern financial interests and international banking powers had accumulated gold while silver circulated among working Americans, farmers, miners. Stage 2 was the act itself. By removing silver from coinage, the money supply contracted instantly. This favored creditors over debtors. It favored Eastern gold holders over Western silver producers. Silver prices collapsed. Miners discovered they couldn't sell to the US Mint anymore. The metal that had been American money for 81 years was suddenly worthless for monetary purposes. Stage 3 came fast. The Long Depression hit in 1873, lasting until 1879. No silver as money meant less currency in circulation. Deflation destroyed the economy. Farmers couldn't pay debts. Businesses failed. All while gold holders watched their purchasing power multiply. Senator William M. Teller of Colorado called it the crime of 1873. Congressman Richard Bland called it fraud that was stealthily passed. Was it engineered? The accusations speak for themselves. Stage 4 was complete. Gold holding Eastern banking interests consolidated power. Silver producing states were economically crushed. The populist movement emerged specifically to fight this transfer, but it was too late. The mechanism had already run. Jump forward 98 years, August 15th, 1971. President Richard Nixon closes the gold window on national television. The Bretton Woods system, established in 1944, had pegged the dollar to gold at $35 per ounce. Every other currency was pegged to the dollar. This was the architecture of American financial dominance. The dollar was as good as gold. But stage one had been running for decades. Throughout the 1950s and 60s, the United States spent money it didn't have. The Marshall Plan, NATO, Vietnam, the Great Society. Dollars flooded into foreign central banks. By 1971, there were far more dollars globally than the US had gold to back them. Stage two was the crisis. Foreign nations started noticing. In March 1968, the London gold pool collapsed. By May 1971, West Germany left Bretton Woods entirely, refusing to accept more dollars. France, under President Georges Pompidou, literally sent a battleship to New York in August 1971 to retrieve French gold deposits. On August 11th, Britain requested $3 billion in gold be moved from Fort Knox. The US had only 10,000 metric tons left, less than half its peak reserves. The game was over. Stage 3 was Camp David. August 13th, 1971. Nixon convened a secret meeting with 15 advisors: Federal Reserve Chairman Arthur Burns, Treasury Secretary John Connally, Paul Volcker. Over 3 days they made the decision. On August 15th, Nixon announced he was temporarily suspending dollar convertibility into gold. It was never temporary. The gold standard ended that night. The Smithsonian Agreement tried to rescue it in December. It lasted 15 months. By March 1973, the dollar was pure fiat currency. Floating exchange rates, no anchor. Stage 4 took a decade, but was absolute. The 1970s brought stagflation. Unemployment at 6%, 1% by August 1971, inflation at 5%, 84% eventually hitting double digits. Gold, fixed at $35 per ounce, surged to $60 by mid-1972, $90 by early 1973, eventually peaking over $800 by 1980. Every gold holder saw their wealth multiply. Every dollar holder watched their purchasing power evaporate. The countries that had accumulated gold before 1971, primarily European central banks, saw massive appreciation. The United States had exported its gold and was left with printed paper. Now understand something crucial. Both of these events, 1873 and 1971, were reactive. They were last-ditch moves to solve problems that had already spiraled. The crime of 1873 was a response to oversupply and fiscal stress. The Nixon shock was a response to a run on American gold. Both were acts of desperation. What China is doing with silver right now is different. This is premeditated. This is the mechanism executed with precision from the beginning. Stage 1 ran from 2010 to 2024. China quietly accumulated silver, not publicly, not obviously, but through coordinated refining partnerships and strategic stockpiling. Most of the world's silver was processed through Chinese refineries before entering global markets. Industry insiders report that China holds around 70,000 metric tons in reserves. But more importantly, they built undisclosed stockpiles off exchange. During this period, global silver deficits were reported for 6 consecutive years, yet prices stayed suppressed. That's impossible under normal market dynamics unless someone is systematically supplying from reserves to prevent price discovery. Stage 2 was suppression. China became the world's swing supplier. They exported silver at artificially low prices, flooding London, Switzerland, Hong Kong, Singapore, the major financial centers. This wasn't charity, it was strategy. Western industrial manufacturers, solar companies, electronics producers became completely dependent on cheap Chinese silver. The United States. We sold off our strategic stockpile entirely. The Defense Logistics AY's National Defense Stockpile held 165 million ounces in 1968. By 2002, it was zero. Liquidated, gone, and domestic production about 1,000 tons annually, while we consume over 3,000 tons. The gap was filled by imports from Mexico, Canada, Poland, and China itself. America stopped thinking about silver as strategic. We forgot. Stage 3 starts January 1st, 2026. China's Ministry of Commerce placed silver under state trading management for 2026 through 2027. This isn't a ban, it's something more sophisticated. It's total control. Every silver export requires state approval now, and China produces about 3,400 tons of silver annually, but consumes around 9,400 tons. They're a net importer, yet they control global refining. In October 2025, Chinese silver exports surged to over 660 tons in a single month, the highest on record. They flooded the London Metal Exchange one last time to ease supply tightness temporarily. But that was the last flood. The faucet is controlled now. Silver prices responded immediately from $29.30 per ounce in December 2024 to $66 by December 17, 2025. In Stage 4, it's happening right now. The United States has essentially zero strategic silver reserves. Rebuilding adequate stockpiles would require at least $50 billion at current prices, and that assumes government purchases don't drive prices even higher, which they absolutely would. Silver is now on the US Critical Minerals list as of August 2025. That enables Defense Production Act authority and potential tariffs. But designation doesn't create supply. US industries need silver for photovoltaics, electronics, electric vehicles, medical devices, defense systems. Every disruption cripples production chains. China, meanwhile, produces over 80% of global solar panels, which require silver paste. They've positioned themselves to decide who gets solar infrastructure and at what cost. The math is brutal. The global silver market in 2024 saw demand reach about 1-2 billion ounces. Industrial applications, especially solar, EVs, electronics, drove a supply deficit of over 215 million ounces. That deficit continues through 2025. Yet, despite 6 consecutive years of reported deficits, warehouse stocks remained at record levels until recently. Shanghai Futures Exchange warehouses have contracted to levels not seen since 2015. Shanghai Gold Exchange volumes retreated to 9-year lows. Combined stockpile reductions represent over 40% declines from 2024 peaks. The invisible inventory that suppressed prices for over a decade is either gone or locked behind export controls. What did this cost America? In January 2025, silver was around $29 per ounce. By December 17, 2025, it's $66. That's a $37 increase. The United States imports between 70% to 80% of its silver supply. US demand in 2023 was roughly 7,000 tons, about 225 million ounces. If we're 75% import dependent, that's approximately 169 million ounces annually. At $29 per ounce, that import bill was about $49 billion. At $666 per ounce, it's $115 billion. That's over $6 billion more per year just in raw import costs. But that's just 1 year. The true cost is strategic. If the US government wanted to rebuild a strategic stockpile comparable to what we held in 1968, 165 million ounces and current prices of $66 per ounce, that's nearly 11 billion. But silver isn't stopping at $66. Analysts are projecting $100 per ounce by mid-2026 based on supply-demand fundamentals. At $100, rebuilding that stockpile costs $16.5 billion, and this doesn't account for secondary costs, reduced solar deployment, higher defense electronics costs, supply chain disruptions in EVs, increased medical technology expenses. When you factor in cascading economic impacts over the next decade, conservative estimates put America's loss at over $400 billion. That's not the price of silver. That's the price of forgetting that silver was strategic. This is observable reality. China accumulated. Done. China suppressed prices through strategic exports. Done. China pivoted to export controls. Done. The wealth transfer is underway right now. December 17th, 2025, silver is $66 per ounce. But this is different from 1873 or 1971. Those were reactive. This is proactive. China didn't wait for a crisis. They created the conditions. They studied the mechanism, they applied it systematically, and now they're executing stage 4 while the United States scrambles to even understand what happened. You might be thinking, but surely this time is different. America has technology, we have financial markets, we have innovation. Stop. That's what they thought in 1873. Silver is obsolete, gold is the future. Farmers lost everything. That's what they thought in 1971. We can print dollars. Gold is a barbarous relic. Inflation destroyed the middle class for a decade. And that's what we're thinking now. Silver is just an industrial metal. China can't weaponize a commodity market. And yet silver is up 127% in 2025. US strategic reserves are zero. Import dependence is 70%. China controls global refining and is the world's largest industrial consumer with the authority to restrict exports at will. The pattern doesn't care about technology. It doesn't care about modernity. It cares about control. And control is about one thing. Who holds the asset when the music stops? In 1873, Eastern bankers held gold. Western farmers held silver. Gold won. In 1971, European central banks held gold. The United States held dollars. Gold won. In 2025, China holds silver. The United States holds what? Futures contracts. Paper claims on metal sitting in Shanghai warehouses behind export licenses. This isn't different. This is identical. The mechanism repeats because the mechanism is mathematical. Accumulate the scarce asset. Suppress awareness and price. Pivot to control. Transfer wealth. The final stage, the one we're entering now, is where the losers realize what they lost and desperately try to rebuild. But rebuilding from deficit is expensive. Rebuilding while your competitor controls supply is nearly impossible. The United States added silver to the critical minerals list in August 2025. Done. We can authorize the Defense Production Act. We have that authority. We can propose a $5 billion critical minerals fund. We can take stakes in mining companies. But none of that creates silver. It creates funding for future production that takes years to come online. Meanwhile, China is consuming roughly 9,400 tons annually for solar panels, electronics, technology. They're not waiting for American mines to reopen. They're using the silver they accumulated during stage 1 to build the infrastructure of the 21st century, while America pays exponentially more for scraps. This is how empires shift, not with declarations of war, not with invasions, with resource positioning executed over decades in markets nobody thought mattered. Silver was dismissed as a relic, a commodity, an afterthought. That dismissal is exactly why it was the perfect target, because while everyone was watching semiconductors and rare earths and lithium, China was quietly cornering silver. And now the solar panels that will power the next century, the electronics that will run AI systems, the medical devices that will define healthcare technology, they all require silver. And there's one supplier left with the reserves and the refining capacity and the export authority to decide who gets it and at what price. So what do you do with this? First, understand that this isn't a prediction. This is an observation of a completed mechanism. The pattern is already run. The wealth transfer is happening right now, December 17th, 2025. Silver is $66 per ounce. It was $29 in December 2024. That's not volatility. That's repricing. That's the market realizing all at once that the supply structure it assumed would exist forever has fundamentally changed. Second, recognize that the entities telling you everything is fine have a vested interest in you not preparing. Governments don't want panic. Banks don't want runs on physical assets. Institutions don't want you pulling wealth out of paper systems. But history is undefeated. Every time this pattern completed, people holding paper promises lost. People holding physical assets won. 1873, paper silver contracts were worthless. Physical gold appreciated. 1971, dollar holders were destroyed. Gold holders multiplied their wealth. 2025, we're watching it in real time. Third, understand the timelines. This isn't a short-term trade. The mechanism takes years to fully play out. Stage 4, the wealth transfer typically lasts 5 to 10 years. As prices adjust, supply chains reconfigure, economic power reallocates. But the early movers, the people who recognize the pattern in stage 3 and position accordingly, Those are the people who captured the majority of the transfer. We're in stage 3, transitioning to stage 4. Right now, the pivot happened. The wealth transfer has begun. It's not complete. And that's the window. The machine that controls global monetary systems isn't hidden. It's not a conspiracy. It's a mechanism. It's been used repeatedly because it works. Accumulate, suppress, pivot, transfer. And every time it runs, a massive redistribution occurs. The question isn't whether this is happening. Silver's price movement in 2025 proves it's happening. The question is simple. Are you positioned on the right side of the transfer, or are you still holding paper in a world reverting to physical? China didn't weaponize silver. Silver was always a weapon. They just remembered before we did. And in the game of resource control, memory is everything. The United States forgot that strategic assets matter. We forgot that supply chains are power. We forgot that physical resources trump financial engineering, and that forgetting cost us over $400 billion in counting. China didn't forget. They studied 1873, they studied 1971, and they executed the same playbook with precision. The mechanism is complete. The pattern has run, and the wealth transfer is underway. If you want to understand how this machine was built, how the mechanics of resource control have shaped every major economic crisis of the last 2 centuries, and what comes next as this pattern continues to unfold, you need to see the full architecture. This video showed you the silver mechanism, but silver is just one piece. Gold, oil, rare earths, semiconductors, they're all moving on the same board, and the entity that understands the pattern controls the outcome. Subscribe if you want to see the system clearly. The next video breaks down the hidden structure behind central bank gold accumulation and why every major power is racing to reposition before the final stage completes. This isn't theory, this is the machine. And once you see it, you can't unsee it. Hit subscribe. The game is already over. The question is whether you'll see the next one coming.